Good evening. This is the post-market recap by AGI Era. Today is Tuesday, December 23rd, 2025, and it is shortly after 40 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a decisive victory for the bulls heading into the holiday week. The S&P 500 finished the day up 0.46%, settling at STOXN 6909.79. Technically, the index has cleared the psychological 6900 level, a bullish signal that shows buyers are firmly in control. The ability to hold these gains into the close suggests follow-through momentum is possible. The Nasdaq 100 led the charge, closing 0.5% higher at 25,587.883. The Dow Jones Industrial Average finished up by 79.73 points. Crucially, trading volume today was elevated compared to recent averages. In a pre-holiday session, which is typically quiet, this high volume implies that this move has institutional conviction behind it. This wasn't just retail buying. Big money was putting capital to work today, suggesting a belief that the path of least resistance is higher into year-end. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, remains subdued, indicating that despite the high volume, this is an orderly rally rather than a panic-driven chase. We are seeing a clear divergence in sector performance that favors growth. Money flowed noticeably into the technology sector, XLK, which closed up 0.4%, while the defensive utilities sector, XLU, lagged, finishing up only 0.35%. This rotation, especially the strength in tech, indicates that Wall Street is positioning for economic strength and is comfortable taking on more risk. The spread between these two sectors tells us that investors are favoring growth over safety as we close out the year. The macro engine room. The primary driver of today's moves can be traced back to a mix of strong economic data and its effect on currency markets. The U.S. reported a stunning 4.3% GDP growth for the third quarter, crushing estimates. Normally, such a strong print would send the dollar soaring, but we saw the opposite. The U.S. dollar index is lower, trading at 97.61. This counterintuitive move is significant because it suggests the market believes the Federal Reserve will look past this backward-looking data and continue its path toward potential rate cuts in 2026. A weaker dollar acts as a tailwind for multinational corporations, which make up a large portion of the S&P 500. Meanwhile, crude oil is trading around $58.49 a barrel, responding to both the strong economic data and the weaker dollar, which makes oil cheaper for foreign buyers. The AI and Tech Monitor, turning to the leaders of this market, artificial intelligence and big tech. NVIDIA was the standout performer, finishing the day up a remarkable 3.01% at 189.21. Microsoft closed up 0.40 cent, while Apple also gained 0.51%. Other notable movers included Alphabet, Google, which surged 1.48%. The strength in this group, particularly the outsized gain in NVIDIA, is notable because it signals a renewed appetite for high-growth, AI-centric names. After a period of consolidation, this move suggests that portfolio managers are adding to their core tech holdings, viewing them as the primary engine for market gains heading into the new year. After hours and look ahead. Looking at the after hours tape right now, shares of Zynex Inc. are among the top movers, showing significant activity after the bell. As we pivot to tomorrow, investors should be aware that Wednesday, December 24th, is Christmas Eve, and the market will close early. We anticipate very light trading volume, which can sometimes lead to exaggerated price moves. The main catalyst will be positioning ahead of the Christmas holiday. The key metric to watch will be whether the market can hold today's gains in the shortened session, which would set the stage for the proverbial Santa Claus rally to finish the year. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.